Good afternoon. Thank you all for joining us. We'll begin the program shortly, so please take your seats.
Well, good afternoon, ladies and gentlemen. I'm Paul Atkins, Chairman of the Securities and Exchange Commission, and first I should like to thank you all for your flexibility in light of the wintry weather that we've experienced and jumping over all sorts of ice and snow to get in here. So I'm glad we were able to reconvene this afternoon after postponement from the other day, and so that so many could join us here in person and by live stream. So it's a pleasure very much for me to be with all of you today, especially my friend and former colleague, now counterpart, CFTC Chairman Mike Selig, from whom we will be hearing momentarily. So as SEC Chairman, I'm grateful to be a guest at the CFTC's headquarters, standing side by side with Chairman Selig as we launch one of the most ambitious initiatives between our two agencies in a generation. Of course, as we speak, Congress has never been closer to sending bipartisan market structure legislation to President Trump's desk. A federal framework for markets that have surged ahead with speed and ingenuity is long overdue. But legislation alone cannot deliver the certainty that investors and market participants deserve. That is why I'm delighted to have the opportunity to work with Chairman Selig to implement clear and principled rules of the road for crypto asset markets. As so many have observed during his confirmation process, Chairman Selig brings to the CFTC precisely what this moment in history demands: a deep respect for market integrity, paired with a practical understanding of how innovation drives prosperity for the American people. He appreciates, as I do, that our job as regulators is to apply the minimum effective dose of regulation, no more and no less. As he recognizes that we are at an inflection point as President Trump assembles a dream team of financial regulators who are united by the common conviction that if we coordinate early, clearly, and in good faith, then we can reduce uncertainty, lower the costs of compliance, and unleash the creative energies of a free people. During Chairman Selig's time at the SEC, he played an essential role in advancing the agency's efforts, ably led by Commissioner Hester Peirce, to course correct the Commission's previous approach to crypto assets. Last year alone, SEC staff provided more clarity on digital assets than in the prior decade combined. For example, the Division of Corporation Finance issued a staff statement on the security status of meme coins, stable coins, mining, and staking activities. The Division of Trading and Markets, meanwhile, published FAQs clarifying the staff's views about broker-dealer, financial responsibility, and transfer agent obligations. And the Division of Investment Management made clear its staff's view that registered advisors and regulated funds can maintain crypto assets with certain state-chartered financial institutions. While not exhaustive, this record reflects the rigor and initiative that Chairman Selig brought to his work on the Crypto Task Force. Even before I arrived in April, Commissioner Peirce, Chairman Selig, and their colleagues on the task force helped to restore confidence among investors that they actually could engage constructively with the Commission without fear or worry. Although significant work remains, especially as legislation inches closer to President Trump's desk, I could not be prouder of what Chairman Selig accomplished during his time at the SEC. And now, under his leadership at the CFTC, the agency is embracing a disciplined but open posture towards emerging market structures. I'm confident that he will craft a fit-for-purpose regulatory regime rooted in data and tempered by humility about what regulators can and cannot foresee. There is no one that I would rather have at the helm of the CFTC as our markets move on chain. And that is why I'm so pleased that Project Crypto will now proceed as a joint initiative between our two agencies. As many of you all know, today's markets do not divide neatly along regulatory lines. Trading, clearing, custody, risk management now flow across asset classes, technologies, and platforms. So fragmented regulation in an integrated market is not a safeguard for investors so much as a source of confusion among them. Yet for decades, we have compelled market participants to operate within a maze of overlapping and often inconsistent regulatory frameworks that reflect historical boundaries more than modern realities. That model is no longer sustainable. If the United States is to remain the world's most trusted and dynamic capital market, then we must take a more coordinated approach. In short, the turf wars of years gone by must give way to a new era of cooperation. As a first step, we have designed Project Crypto such that when Congress acts, our agencies are ready to implement any new legislation faithfully and thoughtfully. Moving forward, that means deploying every tool at our disposal to reduce friction, to harmonize standards and definitions where appropriate, and to equip markets with the confidence as Congress completes its vital work. Working together with a common purpose, we can deliver clearer guidance, consistent standards, and a regulatory framework that reflects how markets actually function instead of how they used to. So as we pursue this new course, let me close by once again thanking Chairman Selig both for his leadership and his willingness to choose coordination over competition, progress over turf. Working together, I'm optimistic about all that our teams can accomplish and how our collaboration can promote the long-term dynamism of U.S. markets. After all, the future of finance will be built somewhere. Through Project Crypto, we can help to ensure that it's built right here under rules that protect investors, support innovation, and cement America's leadership in the global financial system. So thank you. And now it gives me great pleasure to introduce and pass the floor to Chairman Michael Selig, who will offer some opening comments before we proceed with a fireside chat. So ladies and gentlemen, please join me in heartily welcoming my good friend and the 16th chairman of the Commodity Futures Trading Commission, Mike Selig. Thank you very much.
Well, good afternoon, and thank you, Chairman Atkins, for your kind introduction, and to our guests, welcome to the Commodity Futures Trading Commission. Before I begin, I must note that the views I share today are my own as chairman and do not necessarily reflect those of the commission. I'm pleased that my first public remarks as chairman could be here at the CFTC, an institution with a rich and distinguished heritage of overseeing markets that facilitate price discovery, risk management, and reliable commodity prices for everyday Americans. As these are my first public remarks, I would like to begin with a few words of thanks. First, to President Trump, I'm grateful for the trust and confidence that you have placed in me to lead the CFTC during this historic time. Second, to Chairman Atkins and Commissioner Peirce, it was the honor of a lifetime to work with you both at the SEC. You're both principled and inspiring leaders, and I'm thrilled to work with you in this new role to modernize and harmonize our agency's regulatory frameworks. Third, to the dedicated staff of the CFTC, thank you for your warm welcome. This agency's reputation is a direct reflection of your expertise, professionalism, and public service. I look forward to partnering with you as we carry that responsibility forward. Today marks the beginning of a new chapter for the CFTC, one that builds on the Commission's legacy while sharpening its focus on regulatory clarity, interagency coordination, and permissionless innovation. For more than a century and a half, America's commodity futures markets have served as a proving ground for innovation, not just in what's traded, but in how risk is managed, prices are discovered, and trust is established among market participants. That tradition began in earnest in 1848 with the founding of the Chicago Board of Trade. What started as a physical meeting place for merchants trading grain and livestock quickly evolved into something more consequential, a system for standardizing contracts, aggregating dispersed information, and enabling producers and consumers to manage risk over time. As trading activity expanded in the late 19th century, new distribution technologies, telegraph lines, railroads, and printed quotations dramatically broadened access to market prices. Alongside organized exchanges, informal venues known as bucket shops emerged, offering retail customers exposure to commodity prices without requiring physical delivery. While these operations often lacked quality and integrity, their popularity underscored a growing public appetite for participation in price discovery and risk-taking tied to real economic activity. In response, organized exchanges moved to reinforce the distinction between transparent, rules-based markets and purely speculative imitation. Litigation over access to price quotations culminated in judicial recognition of the exchange's role in safeguarding market integrity. In the end, the Board of Trade obtained a victory at the U.S. Supreme Court, and trading in the future price of commodities migrated onto organized trading venues that came to be known as pits because of their unique physical design. The economic dislocation of the Great Depression prompted Congress to formalize this framework. The Commodity Exchange Act required futures trading to occur on organized exchanges and obligated so-called designated contract markets to enforce rules to prevent fraud and manipulation. In 1974, the Commodity Futures Trading Commission was established to oversee these markets as they continue to evolve. As American ingenuity progressed, innovation again reshaped market structure. Open trading floors gave way to electronic platforms. Without the restriction of limited real estate, the universe of futures contracts exploded as new exchanges proliferated, listing thousands of unique products. Congress responded not by freezing markets in place, but by modernizing market oversight. During the period of rapid transformation that followed, Congress and the CFTC collaborated to craft the Commodity Futures Modernization Act, which embraced self-certification and principles-based regulation, recognizing that markets innovate faster than prescriptive rulebooks, and that regulatory frameworks must be durable and flexible. Around this period, the CFTC and SEC were grappling with jurisdictional questions concerning new derivatives products, including single stock and security index futures. The absence of clear statutory alignment created uncertainty for market participants and constrained domestic development. Over time, however, the agencies, working with Congress, came together to resolve these questions through the Shad-Johnson Accord, restoring clarity and enabling these markets to thrive in the United States. Today, commodity markets are once again experiencing a period of rapid transformation. Blockchains, crypto assets, and smart contracts are introducing new methods for trading, clearing, settling, margining, and collateralizing commodity price exposures. These innovations have the potential to reduce operational frictions by enhancing liquidity and streamlining post-trade processes. At the same time, new products such as prediction markets, mini contracts, and perpetual futures have experienced rapid adoption. We are witnessing the foundation of modern markets take shape. As this transformation unfolds, the CFTC has an opportunity to build on its historic role as a forward-looking regulator. By applying clear rules, principles-based oversight, and harmonizing with fellow regulators, the Commission can help ensure that the next generation of commodity markets develop onshore, continuing a legacy that stretches back from the grain pits of Chicago to the digital markets of the future. America is home to the most transparent and well-regulated financial markets in the world. markets that are grounded in market integrity and institutional trust. With thoughtful engagement and a commitment to principled innovation, the U.S. is uniquely positioned to extend its preeminence into the crypto era. And thanks to the leadership of President Trump, Operation Choke Point 2.0 is history, regulation by enforcement is dead, the Genius Act is law, Congress is on the cusp of enacting historic market structure legislation, and the U.S. is now the crypto capital of the world. But we can't assume this will always be the case. America's financial regulators must modernize and harmonize their approach to regulation to future-proof our markets for the innovations of tomorrow. And while market structure legislation will certainly advance these goals, we cannot and we will not let this opportunity pass us by while Congress continues its work. That's why I have already directed CFTC staff to make full use of the agency's existing authorities to begin upgrading our regulations for America's golden age. Whether incumbents or new entrants, the CFTC's doors are always open to those looking to innovate. Now, Chairman Atkins recently shared some news that I will also expand upon, but before I do so, I would like to thank Commissioner Caroline Pham for her leadership as acting chairman. She took important steps to position the CFTC for the future by launching the Crypto Sprint initiative, which helped orient the agency at a critical moment towards the opportunities and challenges presented by crypto assets. Today, we're building on that foundation. Rather than running a parallel initiative with the SEC, the CFTC is partnering with the SEC on Project Crypto, bringing coordination, coherence, and a unified approach to the federal oversight of crypto asset markets. Project Crypto recognizes that crypto markets span across our agency's respective regulatory frameworks. Chairman Atkins and I view this moment as a generational opportunity for our agencies to collaborate on clear, durable rules of the road for these markets. Through this partnership, we'll advance a clear crypto asset taxonomy, clarify jurisdictional lines, remove duplicative compliance requirements, and reduce regulatory fragmentation, ensuring that innovation takes root on American soil, under American law, and in service of American investors, customers, and businesses. Earlier, I mentioned the historic Shad-Johnson Accord, which resolved one jurisdictional dispute between the CFTC and the SEC, and was later codified into statute. With a wide range of new crypto assets and on-chain financial markets, we're due for a new cross-agency agreement to govern these markets. I agree with Chairman Atkins that most crypto assets trading today are not securities. But for too long, crypto asset market participants have struggled to determine whether they're subject to regulation by the SEC, the CFTC, or both. Instead of leaving the industry trapped in uncertainty, as we've witnessed under past administrations, it is incumbent on us to draw a bright jurisdictional line for our nation's builders and innovators. Chairman Atkins recently laid out a common sense crypto asset taxonomy that would make clear that digital commodities, digital collectibles, and digital tools are not securities, even when they're sold as part of an investment contract. I've directed Commission staff to work together with SEC staff to consider joint codification of this framework as an interim measure while Congress finalizes legislation. With a clear taxonomy in place, the next question becomes how blockchain technologies can be harnessed to strengthen market resilience and market functions. In certain markets, 24/7 trading offers meaningful advantages, particularly where global participation is essential to market efficiency. High-quality tokenized collateral can move seamlessly across venues and has the potential to make liquidity more dynamic and markets more resilient. As on-chain capabilities mature, they also create opportunities for new tools, including artificial intelligence-driven systems and autonomous software, to interact directly with tokenized collateral. These systems can programmatically monitor risk in real time and execute predefined strategies within established guardrails. In this way, tokenization and automation can begin to fulfill the original promise of blockchain technologies, a more open, transparent, and efficient market infrastructure. To achieve this work and to help unleash American innovation, I've directed CFTC staff to develop rules to enable the responsible deployment of additional forms of eligible tokenized collateral. The pace of innovation with crypto assets has also led to experimentation with novel types of derivatives. Derivatives with no fixed maturity date, also known as perpetual contracts, have emerged as widely used tools for risk management and price discovery. Yet, despite clear market demand, prior administrations have failed to create a pathway for these products to exist onshore. Reversing this misstep requires transparent and workable frameworks that allow true perpetual contracts to be offered responsibly in the U.S. under common sense regulations. And under my leadership, the CFTC will use the tools at its disposal to onshore perpetual and other novel derivative products so that they can flourish on both centralized and decentralized markets, subject to appropriate safeguards. As our markets continue to evolve, digital wallets, decentralized finance protocols, layer 2 networks, and other on-chain software systems are now part of everyday finance. However, uncertainty persists regarding the appropriate regulatory treatment of these technologies under the CFTC's existing framework. The Commission's existing rules were designed for and assume a centralized intermediary model. With the advent of on-chain financial markets, we have to revisit these design choices and assumptions to facilitate permissionless innovation or risk ceding our global leadership to the many foreign nations that will welcome our builders with open arms, an unacceptable outcome. On-chain systems exist on a spectrum of decentralization. In certain instances, there may exist non-custodial digital wallets or user interfaces that merely function as digital rails through which users can directly interact with programmatic self-executing software code. In other instances, there may be more centralized touchpoints. Under my leadership, the CFTC will explore ways in which the agency can encourage innovation in software development and support builders as they work towards product market fit, including by assessing whether an innovation exemption may be appropriate in certain circumstances. At every step, our actions will reflect a commitment to establish clear and unambiguous safe harbors for software developers to ensure that the crypto innovations of today and tomorrow are made in America. While I share the excitement around decentralized financial systems, intermediated trading will continue to play an important role in crypto markets. That includes trading conducted both on and off exchange with leverage, margin, and financing. In that spirit, we're already taking concrete steps to foster these trading activities. First, I've directed CFTC staff to begin drafting rules clarifying when leverage, margined, or financed retail commodity transactions in crypto assets may be offered off exchange under an actual delivery exception. Second, I've asked CFTC staff to begin drafting rules codifying requirements for DCMs that choose to offer these transactions on their current platforms. Codification will promote consistency, transparency, and a uniform application of core protections across venues, hallmarks of the CFTC's regulatory regime. Finally, I've directed CFTC staff to explore the creation of a new category of DCM that is tailored specifically to retail leverage, margined, or financed crypto asset trading. These venues would perform functions similar to traditional DCMs, but operate under a purpose-fit regulatory framework. Now, our modernized approach will fall short unless it is paired with continued harmonization between the CFTC and SEC. Fragmented oversight imposes real economic costs, raising barriers to entry, reducing competition, and increasing compliance expenses, and encouraging regulatory arbitrage rather than productive investment. Recognizing this, I intend for the CFTC to work closely with the SEC to identify opportunities to better align regulatory requirements across markets. The objective is not to blur statutory boundaries, but to reduce unnecessary duplication that does not improve market integrity. As part of this harmonization effort, we'll examine whether substituted compliance can achieve equivalent or better regulatory outcomes at lower costs for market participants. Within the bounds of the law, and where appropriate, market participants should be able to offer multiple products through a single platform without navigating an inefficient patchwork of registrations and overlapping regulatory regimes. Now, last but certainly not least, I'd be remiss if I did not address prediction markets, or event contracts as we refer to them at the CFTC. These markets are not new. They've operated within the CFTC's regulatory perimeter for more than 2 decades now. but despite their history, many view them as novel or unsettled, and that uncertainty has not served our markets well, nor has it served the public interest. It's time for clear rules and clear understanding that the CFTC supports lawful innovation in these markets. Consistent with my commitment to fostering responsible innovation in crypto asset markets, I'll continue to support the responsible development of event contract markets and the important role they play in the broader financial system. Here's how we'll be moving forward. First, I've directed CFTC staff to withdraw the 2024 event contracts rule proposal that would prohibit political and sports-related event contracts, and the 2025 staff advisory, which cautioned registrants about offering access to sports-related event contracts. While the advisory was issued at the staff level with the intent of bringing clarity and awareness to the litigation, it's instead contributed to uncertainty in our markets. Second, looking ahead, and in the spirit of markets that trade on expectations, I've directed CFTC staff to move forward with drafting an event contracts rulemaking. For too long, the CFTC's existing framework has proven difficult to apply and has failed our market participants. That's something that I intend to fix by establishing clear standards for event contracts that provide certainty to market participants. Third, I've directed CFTC staff to reassess the Commission's participation in matters currently pending before the federal, district, and circuit courts. When jurisdictional questions are at issue, the Commission has the expertise and responsibility to defend its exclusive jurisdiction over commodity derivatives. Finally, I've directed CFTC staff to work with our counterparts at the SEC to develop a joint interpretation on Title VII definitions. This effort would draw clear lines between certain commodity and security options, CFTC-regulated swaps, and SEC-regulated security-based swaps. Clear, coordinated guidance will allow firms to scale products responsibly and reduce the number of innovations that fall into what Chairman Atkins has so aptly described as the no man's land between our two agencies. As the new frontier of finance descends upon us, regulators must relentlessly modernize, harmonize, and future-proof their approach to regulation. But we must not abandon our age-old principles like investor protection, anti-fraud, anti-manipulation, and market integrity, which remain our North Star. I'm honored to partner with Chairman Atkins on Project Crypto and lead the CFTC into this new era for our financial markets and for the new frontier of finance. Thank you very much for your time today, and I'm looking forward to the fireside chat.
All right. Well, thank you both, Chairman Atkins and Chairman Selig, for your time today. And looking forward to getting into this both with you. So let's start with this. President Trump has said he wanted to make America the crypto capital of the world. And you both have pledged to help him deliver on that promise by bringing the agencies overseeing crypto closer together and really, in your words, harmonizing the regulatory process. But harmonization is not something we've seen a lot of from your two agencies. It was only really last year that we saw the SEC and the CFTC come together and really work together on some of those issues within their shared jurisdiction. But today you're changing that. You're working together on Project Crypto, making that a joint agency initiative. But before we jump into the details there, I do want to drill down on this new partnership. Chairman Atkins. Harmonization is a nice word, but what's changing exactly between the agencies, and what is this new partnership going to look like in practice day to day? As if you guys aren't on the phone enough all the time anyway.
That's right. Well, thank you. Well, thanks for agreeing to do this and moderating us here. And it's great to see everyone here in the audience. Well, so first of all, you know, this is now my third time at the SEC over a span of 35 years or so. So I've seen the good, bad, and ugly of, cooperation or non-cooperation, and then outright kind of, if not fisticuffs, then, casting, aspersions, at a distance between the two agencies. So, again, I think this is really a problem of overlapping jurisdiction. And so I think that we can, like I was saying, and as Chairman Selig was saying, that can be solved by collaboration, and where, we have the same goals as far as building the markets, and as you heard, making America the crypto capital of the world, as well as other things too, and make our financial markets, maintaining their number one spot in the world. So we have to do that by competing with other jurisdictions, and we're the only one that has this bifurcation between the commodities and futures side and the securities side. So we can, solve that. And so I salute Acting Chairman Pham for having, started the process, since inauguration when, dealing with the SEC. And so I was able to witness that after coming in April. And then now it's really exciting to carry that forward with Chairman Selig.
So I understand this is not a merger, right? We heard this on TV this morning, but this is more of a collaboration to help consumers. Paul, from your speech, it was equip markets with confidence. Can you give us, Chairman Selig, some examples of how exactly this will work and how it will benefit consumers?
Yeah, that's right. It's coordination, not consolidation. We're working together on a daily basis to make sure that there's no gaps in our regulatory framework. So it's not just making sure there's not duplication, because of course we do see a lot of that with our registrants, and we do want to fix that, right? There's many of our registrants that have to duly register and then are subject to really different standards across agencies. And that's really a product of history, because we've regulated certain participants and over time developed certain rules and regulations based on comment from our stakeholders. But that cannot force our market participants to have to deal with inefficient regulations and rules and things like that. So working together to make sure that we have some standardization. I mentioned substituted compliance in my speech, so coming up with ways to allow our market participants to comply with certain rules and requirements and then not have to duly register in some cases. Also sharing market data and surveillance. So we have updates from our teams, and our teams are looking at the commodity markets on a daily basis, some of which are index products that include securities. And so the best place to get data and information about the securities markets is the SEC. And then, of course, there's some ETPs and other products that have commodities is the basis for those vehicles. And so having that shared information is going to be really helpful across the board. And of course, in crypto, as everyone knows, these markets just span securities, commodities, things that are in between, collectibles and things like that. And so having that coordination is going to be really important to make sure that we're competitive with foreign nations and really the best and most, the gold standard for crypto markets.
Even with coordination, the SEC and CFTC still have different statutory mandates. Are you guys concerned at all about, potential regulatory arbitrage or, people maybe trying to skirt around those, mandates that you guys have? And if so, how are you guys trying to prevent it?
Well, that's exactly why we need collaboration, because you have the regulatory arbitrage if you have gaps between the two agencies, because when you boil all this down, it comes down to money. So if things are uncertain and your lawyers, whom you pay a lot of money to, and accountants and whatnot, can't figure it out, then you're left when I'd like to talk about the no man's land between the two fortresses of SEC and CFTC, and so there are lots of bodies of dead products that didn't make it that are strewn around that no man's land. So we need to avoid that, because then people, like Chairman Selig has said, go abroad. And so there's an alternative there. So that's bad for American investors, because then they have to, if they want that particular product, they go abroad. Perpetual futures and that sort of thing is a good example of that. And so that they're under foreign law and they don't have the certainty of using American law. So we have to be smart. We have to be united. We cannot allow, petty quarrels to make life difficult for investors and market participants. So our markets, deserve that, and we, on behalf of the taxpayer, need to deliver that.
I mean, let's turn to Project Crypto, because It initially was a an SEC initiative launched by you, Chair Atkins, last year to really modernize U.S. securities laws to make it work for modern technology like digital assets, crypto, prediction markets. How does the CFTC fit in here, Chair Selig?
Well, it's really the same playbook. We need to modernize on both sides of the house, and then we need to harmonize. So it's not just enough to say, software developers are protected on the SEC side or the CFTC side. We need to do it on both, and we need to have consistent standards. So this endeavor ensures that we're coordinated, that we have a clear line of communication, and that our standards are consistent. And that's going to help us be competitive with foreign countries where, as we mentioned, they don't have that distinction between the two. There's a lot of advantages because our agency really has experience regulating markets where you don't have the same sorts of informational asymmetries that you deal with in the securities markets, which is why I think the legislation, which we're really excited about and commend Chairman Bozeman and the Senate Agriculture Committee for getting that through today, that really contemplates a big role for the CFTC because we have that experience with these markets that the information is not coming from a single source, it's coming from the marketplace. We're tracking that, we're surveilling that, and then we can learn from the other side of the house where the SEC has a lot of experience regulating participants that are raising capital and have these informational asymmetries with persons who are making investments. And with crypto, you kind of see those two worlds merge. We have assets issued and then trading in these open markets. So we're excited to have that collaboration.
Mm-hmm. And you mentioned the token taxonomy, you're trying to codify it on the CFTC side. Is that something you guys are also working with Congress as they work to establish the market structure bill?
We've given a lot of technical assistance to both houses of Congress as the House was developing their Clarity Act, and now as the Senate is developing its Market Structure Act. So both committees in the Senate as well. So, we stand ready, willing, and able to help them, codify as much of this into law as, they choose to. And then we stand ready to unite and to, if there be gaps, in the legislation, however it might come about, we will use our authority to help plug those gaps and, again, to bring certainty to the marketplace.
Okay, so yesterday the SEC released some guidance on tokenized securities, and you've talked a lot about bringing capital markets on chain as part of Project Crypto. I have to ask, where are we with the innovation exemption that you mentioned last year? It's almost the end of January. We've got a couple more days. I think you said possibly before the end of January, but where do we stand on it, and what can we expect to see when we do see it?
Well, so we're still working on that, obviously, and we need to measure twice and cut once, and so we have solicited comments and whatnot. So we want something that is fit for purpose, that will allow enough people to be able to develop their products, within a predictable ambit of maneuver, and then with an end date, an off ramp, that sort of thing. So that's the general outlines of it, and we had a shutdown to put up with, and perhaps now another one. So we'll see. So we're working apace at this, and then we want to. It would be nice to see the direction from Congress as well. So I'm really hoping for a bill to be delivered to the president very quickly. So that's our hope. So we're taking all this into account.
Are you waiting on market structure to be passed before you put out the innovation exemption?
No, not necessarily. I mean, because I think that's within our ambit of maneuver and our authority. But again, I think there are a lot of moving parts to the situation, and I just want to make sure that we keep the train going forward at full speed and for all parties' sake.
Chairman Selig, I heard you say recently that you see capital markets coming on chain within 1 to 2 years. I feel like that's a very short timeline for U.S. capital markets all coming on chain. What has to happen between the SEC, or aside from market structure passing, what has to happen between the SEC and the CFTC in order for that vision to become a reality?
Well, I didn't say all capital markets, so let's
Okay.
get ahead of ourselves. No, but I do think we're already seeing really this convergence where a lot of the products, this goes to the point of the tokenization statement the SEC just put out yesterday, we're seeing so much interest in tokenized securities. We're seeing a ton of interest in tokenized derivative instruments and leverage products. And so we have to embrace that. We have to set rules for that. We can't fear the future and basically say this stuff happens offshore, but not here in the US. That does put a lot of responsibility on us to develop the rules for that and make sure that it has appropriate guardrails. But we're going to do that. So we're going to work closely with industry to make sure that when these markets are ready to come on chain here in the US, we have the right safeguards. But I do think this is happening all around us. It's happening offshore. We've seen so many of these products trading on offshore markets that they're really banging at our doors to get it here. That's part of the reason we've developed here at the CFTC an Innovation Advisory Committee, which will be comprised of CEOs from some of the leading digital asset firms, prediction market firms, major exchanges like ICE and NASDAQ. And so we can really think about the changes happening in our market structure and develop the rules that are appropriate to make sure that America leads in these new markets of the future.
Yeah, there was an update on that. So there was an advisory committee established towards the end of last year, and I believe you're adding to it, right? Is there any more news to share there for the advisory committee?
That's right. So we have 15 CEOs that were announced previously. That CEO Innovation Council is now part of a FACA committee. So it's an Innovation Advisory Committee under a new name. And we're going to be announcing soon additional folks that will be joining that committee. So we're really excited. And we're going to be using that as part of our approach to regulation because we're in an ivory tower. We need to learn from the marketplace. We need these firms to have a seat at the table to really tell us what they're witnessing in their business rather than us going around and telling them this is how you need to build your technologies and your businesses.
You both talked about this notion of a super app. How will your agencies coordinating more closely together help you, or I guess help the industry build towards that goal? And then sort of what are the risks that you're trying to mitigate around building something like that as well, or industry building something like that?
Well, I think that's the ultimate collaboration. The idea of a super app where with substitute compliance and recognition of, the common goals and common processes and to align our regulations can save a lot of money, I think, for investors because they ultimately pay for whatever market participants have to pay for in terms of direct costs or if diminished competition. So I think we want innovation, we want competition in our marketplace, and so I think we can achieve it that way. But one of the first steps is to try to cobble out a really comprehensive memorandum of understanding, with respect to our operations and oversight and supervision. So I think that's really incumbent. Back when I was a commissioner back in the aughts with Commissioner Walt Lucan, it came to our attention that there had been a draft MOU for examination between the two agencies that was just wafting in the wind for years and had never been finalized. And so it took the two of us to kind of crack heads and then get this thing signed and through the respective commissions. And so that was a very feeble first step, and I'm not sure how effective it was. But but now it's in our lap, and I think at least I want to seize this very robustly and make sure that we can drive this home. And again, for future proofing, and the more that we can collaborate, the better the world will be.
Yeah, I think if we do our job right, there are no regulatory shortfalls or anything like that. We're going to make sure that there's consistent standards, and so if some firms are subject to additional registrations and requirements, if we can simplify those, streamline them, make sure that there's a primary regulator, it's not going to be a hole in the regulatory framework, but rather a more efficient system for actually regulating those firms.
You're both describe yourself as pro-crypto, pro-innovation, and sort of pro-letting the markets decide who wins and loses, not regulators dictating that. But TradFi has been pushing back significantly on a lot of these new technologies, crypto, prediction markets, and some of these TradFi participants are within both of your jurisdictions. But from the meetings you guys have been having, and you guys have been seeing this drama playing out on the on the public stage, right? Like, how do you see this sort of turf war, as it were, between the old world and the new world playing out? And we can start with Chairman Atkins.
Well, I mean, we'll see. I mean, some of that is now, squarely on Congress's plate, and so we'll see how they deal with that. And there is, what we need to do is, there've been lots of regulatory impediments over the years to prevent our financial system to modernize. And so, we have to take that into account as we go forward. But we need to make sure that, investors are not shortchanged in, whatever it comes about. And I want our markets to be strong and fairly regulated. So within those boundaries, we need to permit people to compete, on a level playing field, and that's important, and need to accommodate new ways of doing things, and then let investors ultimately decide what they prefer. And that's, I think, ultimately our customer is investor, and make sure that they're well served.
Our role as regulators is not to stand in the way of competition by upholding some archaic rules and regulations. It really should be to meet the markets where they are, meet new innovators where they are, make sure that what they're building is consistent with the policy rationales of our statutes and the reason that we're regulating these markets. But beyond that, our role is not to say, this is the market structure. You have to build your business to fit with that market structure. And I think this is really a great, unique time for the agencies to collaborate and figure out how do we achieve the same policy aims that these agencies have been, policing for decades, and allow for this innovation to happen at the same time.
Well, let's switch gears a little bit to Congress and the market structure process. We're lucky enough to have the Senate Ag Committee also mark up their portion of the Clarity Act this morning on the day that we're doing our Fireside, so we have more to talk about. But it was a partisan vote. The Republicans voted it through, no Democrats voted for it. But I think, in lieu of legislation, there's a lot that you guys can do, and I think the industry would agree with that. In the absence of legislation, positive administrative action can suffice in the meantime. But as regulators, do you think that legislation is crucial to the future growth of the industry? And we can start with Chair Atkins again.
Well, so we do have, a lot of freedom, under the various statutes at the SEC and likewise at the CFTC to make accommodations. And, Congress has given us broad exemptive authority. And so, we can use it, and we should use it where appropriate. And then, we'll see what Congress comes up with. But I do feel very strongly that, notwithstanding what we do on the rulemaking side, it's really crucial for Congress at this moment in time to step forward and come up with rules that, legislation that can guide us and that can undergird our efforts. Because, people come and go, and commissions come and go. And, the last thing I'd like to see is to have, something happen in the future that kind of upends a lot of the things that we will have put into place that people then rely on. And then, the prospect of having rug pulled out from under them is not an attractive, prospect. So anyway, so that's what's important about legislation going forward.
Yeah, and likewise here at the CFTC, we do have a lot of authority under the statute, and we do have authority to police fraud and manipulation in these markets. We have pretty broad authority over the retail leverage spot, as well as, of course, the derivatives markets. But we are in a post-Sloper Bright world. We are in a world where there's a clear emphasis on putting things in statute, and we talk about future-proofing the industry to make sure that the next Gary Gensler doesn't come along and blow it down. Having something in, ink in a statute is really helpful to us as regulators. It makes sure that the markets have predictability and that they don't change from administration to administration. So we're going to use our authorities, as I said earlier, to make sure that we put the rules in place that these markets can succeed here in the U.S. But the statute's really going to help us future-proof that and lock it in.
And then just on the Senate Ag markup again, I mentioned the Dems didn't vote in favor of the bill, but they said that, they were almost there, but there's some policy disagreements that they, haven't been able to get past. Chair Selig, what is your understanding of, where the Dem sticking points are, at least when it comes to digital commodities? What is it that they want to see, change between now and a Senate floor vote?
I can sympathize with the partisan vote myself. But
Right.
no, I think the ag draft is really in a great place, and I'm really glad that they put that through committee. I think what's really great about that text is that it includes broad exemptive authority for the agency. And, in many circumstances, we need to use that authority. There's cases like we're talking substitute compliance, and as markets develop over time, we really don't know what the digital asset markets of tomorrow are going to look like. And so having that exemptive authority in there, recognizing, of course, we have on-chain markets and just all sorts of new innovations coming down the pike, that's really helpful. And we're excited to work together with the banking committee as well to get that across the line. And there's areas that are really beyond our remit on yield and other things. But I mean, the statute's really moving, and the president's leadership's really pushing this across. And we're really glad that we're on the cusp of having some clear statute in place.
And quorum at the CFTC, they want to see you have some colleagues here, so you're not alone.
Well, that's, look, that's the president's decision, and I will work with whoever is appointed to work with me. But right now we've got so much work to do that I'm just focused on making sure the building's in order and that we can get all of the great agenda that we just discussed across the line.
Awesome. Well, to close out our discussion, I want to ask both of you, in light of making everything future-proof, how do you both plan to future-proof this partnership beyond both of your tenures at the SEC and the CFTC? And we'll start with Chair Selig this time.
Sure. Well, the memorandum of understanding that Chairman Atkins mentioned, I think, is going to be really a historic piece of documentation that's going to formalize a bunch of different processes between the agencies. And that's hopefully something that lives on well beyond this administration. I also think just the getting the staffs working together is going to have a real impact. Day-to-day coordination and collaboration, relationship building between, career staff within each building, that's going to make us all better as agencies, as well as, as lawyers and as market specialists. And so that's very important. And I also think just, the leadership at the top has to continue to make efforts to collaborate, right? There's joint rulemakings coming down the pike, potentially with legislation, but even non-mandatory joint rulemakings. I think harmonizing, making sure that our requirements are consistent and not just operating in kind of isolated silos. I mean, that type of relationship building is going to be very important going forward.
Yeah, so I agree completely with that, and I emphasizing joint rulemakings. I think having been in Washington long enough now, I mean, the more that we can knit things together, on activity like that, even if it's not a mandated by Congress type of rulemaking, like Dodd-Frank is replete with those sorts of things among like 5 agencies or whatever. So, even if it's short of that and involuntary, I think that will help. Make it, someone would have to explain exactly why you're going to then bifurcate something. So in the future, so I think that's incumbent on us to work towards, and I really relish that. I think this will be fun, and so we have a lot of work to do, though. It's not minimizing that aspect of it, but I think that's what we're called to do now. And so let's hope that Congress can work out their differences on these particular issues and deliver a bill to the president for him to sign.
And just curious, how often are you guys on the phone these days? Every day?
We'll see. I mean, whether it's been so busy here recently, and Mike, Chairman Selig has been, swallowed by the whole process of moving in and getting things organized on his side. But we're committed to at least weekly discussions, and we're not that far apart, physically, here in the city. So, we'll be working on all ends to knit that together, and then importantly with the staff too as well.
Awesome. Well, Chairman Atkins, Chairman Selig, thank you so much, and thanks everyone for joining.
Good job.
think we're gonna get you guys to the back upstairs. Yeah, we have a call. Are y'all going straight out? We're gonna take them upstairs.